Hello, my name is Dr. Michael Diston. I'm sitting here with Chris Malloy and Steve Fornato of TMFD Financial. And we've been talking about getting practices ready for sale. One of the things that I'm interested in is this retirement readiness thing. And I wonder, should a client be coming to TMFD thinking about retirement or thinking about selling their practice? What comes first?
Yeah, well, in order to have a successful experience, it's something that needs to be planned. It's a process. You'd want to be proactive rather than reactive. One of the key things that I think is important is to have a financial plan put in place. That plan can look at all aspects of a dentist's financial life. So it can address the key question about retirement readiness. One of the key elements we look at is something we call the financial independence target, or your FIT number, which is a way of saying, okay, I need to achieve X amount so that will fund me throughout my retirement. But beyond that, it is about all those elements of planning. We talked about the tax planning and making sure that you're putting yourself in the best position possible. The readiness for the practice and making it look as attractive as possible in terms of the efficiency and the cash flow. So those things take time. If there isn't a lot of thought given to it in advance, then it may not turn into the best outcome, both for the sale and also throughout retirement as well.
Do you have any success stories where someone went through that process and it was a win for them and everybody else?
Well, I think back to one that really stands out in my mind where he was a specialist, in fact, and which doesn't happen very often, specialist sell, but in fact, very well organized, planned well in advance. We looked at the tax issues for him. We put him in place with a commercial lawyer to help draft the deal, clearly laid out the steps. It was going to be a transition, and the financial readiness, the business transition was all done very smoothly, and it's a real success story as I look back on it now, because the new buyer is very established in the practice at this point, and the seller, he's quite happy enjoying his retirement and easing into it.
I'm sure there's stories that are not so successful. I think the bottom line comes in terms of being proactive instead of reactive. Any thoughts, Steve?
Yeah, you hit the nail on the head in that being proactive is important. But you're going to get situations where not being proactive is a bit of a detriment. And I think the biggest detriment is not only meeting that financial independence target number that we talked about, but it's taxes as well. I recall a situation where we had a dentist that was wanting to sell, and they wanted to sell sooner than later. And it was almost they had enough, the management aspect of the practice, they were just getting frustrated and they wanted to sell. This individual was fortunate enough to save quite a bit of money in their corporation, so unfortunately they were unable to utilize their capital gains exemption because the purification process, the 2-year window, they were unable to meet. Therefore, they lost out on the ability to claim the capital gains exemption and paid a little bit more tax at the end of the day. In the long run, sure, taxes were paid, but maybe it means that independence target number was a little bit of a shortfall, and then we've had to come up with either the individual has to work maybe a little bit longer as an associate in order to make up for some of that shortfall.
We often think about rules of thumb, and they say that you should think about 3 to 5 years of preparing to make sure that your practice is in a good position to be able to sell. In an ideal world, is that number too short? Should it be earlier than that? What would your best case scenario be? Obviously, you'd probably like them to be a client when they're graduated, right? But realistically.
Well, when it comes to preparing a practice for sale, 3 to 5 years does seem like a reasonable amount of time, because it has a chance for taking a closer look at the lease and making sure that the term renewals are put in place, an opportunity to look at the tax planning that needs to be done, an opportunity to look at making sure that there's appropriate staff contracts that are in place, and a time too to make sure that the practice software is used very well. One of the key metrics that's used in valuing a practice is the number of active patients, which means that the software has to be maintained very well.
Mm-hmm. And you know, the 3 to 5 years in terms of a practice sale is ideal, but you know, we have 20 years or 30 years of preparedness to get us ready for that next stage of our life, right?
Yeah.
So you talk jokingly about, you know, wanting to work with an associate or wanting to work with an established dentist. Being able to plan from the beginning is important. The idea of saving is great, but you need to plan in order to save. We shouldn't save first and then plan later.
Right. So the earlier the better is the best.
Absolutely.
Absolutely. Thank you very much.